Good afternoon, everybody. Thank you for joining us. We'll just pause a minute to allow everybody to log on. We have nearly 80 registered for today's call, so let's just allow a little bit of time for that, if we may. Okay, so let me start by firstly saying thank you very much to the AEQ team for collaborating with us in the Food Service Equipment Association for this State of the UK Food Service Equipment and Supplies Industry Report. I'm joined today, if I could take the next slide please, David, by David Demerez, Vice President Marketing and Strategic Development from AutoQuotes. Also his colleague in the US, James Eby, who's a business intelligence analyst, and I'm sure known to many of you, Chris Richardson, who's the business development manager for AQ in the UK. I'm Keith Warren, the Food Service Equipment Association, and what we have for you today is a past, present and future presentation. It's split into two parts. I'll take you through the very latest information from our business outlook survey, and Adam has been busy working away getting the initial results together on that. If you have any questions during today's presentation, please post them in the questions box, and what Chris will do is collate them together for us to take them at the end. But it really leaves me just to say welcome to you all to this meeting as FEA members or non-members. It's part of our work in trying to ensure that we deliver relevant and up-to-date information to all of you. I know many of you have been involved in the business outlook survey that we've done, and that data is invaluable in terms of our use of it generically with governments and authorities, particularly in turbulent times like such as we face at the moment. What I'll do after my presentation is hand over to Chris, who will then initiate the second half of the presentation. So let's get started. If I go to the next slide, please, David. Thank you. So what we're going to run through is the UK market update from an FEA perspective. So the next slide just indicates we've got to date 34 respondents who have contributed to the survey. It's going to be open until Friday. So if any of you haven't contributed, please do so. The more information, the more input we get, the better the output. But as you can see, it's spread across the breadth of our membership base. And as I say, 34 respondents have submitted so far. The next slide shows the shape of that industry profile of members in terms of the numbers employed. And as you can see, it's an even split across the types of supplier in terms of the number of staff they involve. Just anecdotally, we've picked up across the industry that most companies are running at 30% less staff than they were pre-COVID. The first question was, what growth would you forecast over the next 12 months? And as you can see, 4 out of 10 are expecting a decline in sales. But interestingly, 41% showing growth, anything between 5% and over 20%. And that's probably a result of what we see there as being the strategic adjustments based around their forecast for the future. But there's optimism, and that's got to be good news in terms of the outlook for the market. Next slide, please, David. So then when we look at the quarter sales comparison compared to the same period last year, we're seeing 7 out of 10 in a worse position. But as you can see, some are level and some have improved their performance, which is again probably through to some of the information we'll see later, which is about an adjustment to product mix. But again, there are gaps and pockets of activity out there that are benefiting the market, certainly. Next slide, please, David. Thanks. What we'll see now are what are the major concerns of food service equipment suppliers over the next 12 months. Lack of economic growth is the major concern, with nearly 95% citing that, no real change or to what our expectations might be. That linked or directly to reduced consumer demand. And there we see in third place the uncertainty over the UK role in Europe and the Brexit issue, which remains unresolved as some of the discussions go on in terms of what that might mean to tariffs. And of course, that has a direct effect on what we see at number 4 there, which is potential for price increase and inflation, with 2/3 of the respondents citing that as a significant problem. Next slide, please, David. Thanks. So then when we look at the pre-COVID sales and what current sales are through FEA members, and this picks up anecdotally what we're getting fed in from the membership, that most businesses are at about 2/3 of their pre-COVID sales, and that's reflected in this graph. But as we see, for some, they're still trading at only 10 or 20% of their pre-COVID sales. And that's pretty much where we were a month after we went into this, when we did our first survey back in May. So we see some recovery certainly taking place, but challenging for many. Thanks, David. So, thanks. So this is the report from that survey that I was just mentioning, where we asked, what do you think the future 6, 12 and 18 months look like? And this shows the shape then. So many were expecting to be about 50% of their pre-COVID turnover by December. The strongest line being most companies back to 80% of turnover in 12 months, and then most at the 100% level in 18 months. That's going back to the last report. If I ask David to move on to the next slide, you'll see the feeling within the market this week. And what we'll see here is that looking to March next year, companies are expecting to be about 70% of their turnover, in 12 months at about 80%, and again in 18 months, March 2022, back to 100% of turnover. So linking those together, it shows that it's a delay over what we saw in the previous outlook. But I think really what we're highlighting there is the slower recovery, purely because of the pace of opening of operator outlets. Thank you, David. And so we want to look at those drivers for growth, certainly over the next 12 months. And we asked that question, and 8 out of 10 saw the opportunity as being in selling to new customers, which is an interesting, because you look at that in comparison with the next element, which is expanding into new customer segments. And then third, selling more products to existing customers. So we're going to see more competition. That's inevitable out of those two key drivers at the top there. Does that mean there'll be less channel reliance as companies look to go outside of their traditional channels of sales? Possibly extending their product lines in selling more new products into the market. But I think the inevitability of that we pick up on is that we'll see more competition. Our next slide looks at what we think will be the focus as far as sales efforts over the next 12 months. And top of the list there, dealers, with 3/4 of the respondents picking that channel up. But second to that are the kitchen houses, which is obviously closely aligned to the dealer channel. And then third on the list are the independents coming through. So we see quite a leadership position for those 3 key target areas. Thank you, David. And then in terms of how that work gets enacted, I think what we've all recognised as being a dramatic shift that we've seen in all our businesses over the last 6 months, with the use of LinkedIn and online business platforms coming in there at just under 90% of our audience here who responded, picking those up as the key channels. Then secondly, email, and then other social media at just below the 50% mark. And obviously, I think quite a dramatic turnaround as against the role of trade shows, networking events and conferences, and also physical mailings. So certainly a leadership position in the way the industry is looking to address the need to make sales. Thank you, David. But then when we look really at what the greatest threat to that growth that we saw a few slides ago in the current climate is that weakening economic market, the inability to control or mitigate or pass on cost increases. And as I mentioned, the outstanding issue of tariff barriers in relation to products coming in from the EU, and also in terms of exports, have got a challenge there. And until we get a clear picture, it's going to be difficult for businesses to work around that. I've just come off a call this morning seeking for that clearer picture in terms of the negotiations, and it's still seen that it's likely to go to the wire right up until the end of December. But then also the other key element is a shift in customer demand away from products, which is again that competitive element that I was talking about a little bit earlier. So there's the overview of the outlook. If I ask David just to move on to the next slide, please. What we're about to see is the market factors survey that we undertook back in June. And on the next slide, we'll see the key issues that you all saw as bringing about changes as far as the manufacturer and supplier market. And I thought worth just recapping on these, and we'll have them available for after the presentation, which is also being recorded. So if you need to pass this on to colleagues, you can. But a proliferation of the second-hand market, changes in the route to market, a contraction and concentration of the industry at all levels, and longer lead times potentially due to reduced capacities. If we then look at the next slide, we look at the changes in the dealer market, where again it's the issue of losing some dealers, some shrinkage. One respondent suggesting a 25% reduction in the number of dealers, and certainly challenges there, although we feel what's potentially helping that area of the market is the regrowth in the service industry as a result of operators coming back on stream and wanting their equipment cared for and brought up to standard. And then finally the operator market, and not really much to add here from what we hear in the press. It's a slow opening, a faltering reopening of the market in many areas, but certainly a concentration perhaps towards dark kitchens and ghost kitchens, complete change in dining. But what all of those elements bring to the fore is the immense strength and adaptability of the out-of-home eating market. And we know certainly there are pockets of growth and pockets of extended use of food service operator outlets because of the change in working practices, and also the anticipation of the consumer to being able to use what is open at any particular time. And there are some significant pockets there, and I'm sure many of you will be picking that up and recognizing that through your sales activity. So there, to summarize, if I may, and just to move on to the next slide, please, David, that survey link is on the screen in front of you. It's available through the FEA website, or contact any of the team and we'd be happy to help. Also, just quickly reference there some of the resources that we have, such as the scenario planning webinar that we did with Martin Drake. Very valuable perhaps at this stage in the process. Now we know where we are after 6 months. And also the seminar on pricing, which an important issue that's been addressed through the responses there, through Mark Peacock, the pricing guru for industry. So that concludes my part of the presentation. Thank you very much to you all for listening, and it's with great pleasure that I hand over to Chris Richardson to act as our MC for the second half of the programme. Over to you, Chris.
Thank you, Keith, and thanks very much for providing that sort of internal view on how the markets felt the impacts of the pandemic, and more importantly, how it plans to exit it. So thank you for that. We're going to move on now, look more of a sort of a view from the data set that we have as AutoQuotes. As you can see, we've got the agenda in front of us. The first thing we're going to talk about is what our data is. As you can imagine, we sit across so much of the market and so many different segments that the amount of data that we have is very powerful and is very detailed. So we'll go into a bit about what that data is and what it looks like. We'll move on and talk about pricing trends, and we'll see a bit more about, Keith mentioned just briefly about pricing, but we'll look at that in a bit more detail as well. And we'll go on to quoting activity, which really is looking at the volumes of quotes that are being created in the UK market and how that's changed over time. We'll talk about COVID. I know we're all fed up of hearing about it, but we'll look at it from a data point of view and see its impact on the market in the UK. And then finally, before we head into the questions, we'll talk about quote acceptance, which is a new free feature that's on AutoQuotes now, that's providing even more detailed data for us to come up with some new insight. So let's talk about our data. So David, thank you very much. So before I hand over to David, who'll go through this, we have a really unique view of the UK market at AutoQuotes. We've got over 500 dealers, we've got 150 odd manufacturers. They're raising thousands of quotes a day. So the amount of data we have on what's being quoted, in what volume, all of that sort of stuff is very, very powerful. So we probably provide one of the better accurate data insights in the UK market for sure. Of course, all the data in the world is useless unless you have someone who's good at analysing it, which is why we took on what I'm going to name as a data superhero in James Evie, who is on the call with us. He's an expert at analysing data and making it readable and usable. So a lot of the stuff you're going to see over the next 20 minutes is produced by him. So I'll hand over to David, who will talk to us a bit about what the kind of data is that we hold.
Great, thanks, Chris. So we have, like Chris said, a lot of data at AQ, and to put it into context, in the last year, just in the UK alone, we had 25,000 different quotes that are sent out. That equates to about 177 million pounds worth of quoting volume that gets sent out. Like Chris said, this data is only useful if we can analyze it, but also if it's clean and kept up to date. Part of what we do at AutoQuotes is create order and keep everything up to date with our content services team. They're cleaning our database constantly and keeping all the product information up to date. Likewise, we need to continuously be cleaning our quoting data. One of the things we did in this data set, and what you'll see in the next several slides, is we took all of those quotes and broke them down and cleaned out the ones that are quoted infrequently or for whatever reason add noise to the data to give us actually a much cleaner data set. And as you can see, we still have 111 million pounds worth of quoting volume in this particular data set over the last 12 months. And you can see the other numbers as well, 625,000 units quoted, which get cleaned up to really the 155,000 most quoted units or ones that are quoted consistently, so you can actually see trends throughout this year. So that's what we did with the data, and there's a lot of it. And Chris is right that James has done some heroic work in analyzing this. A couple quick notes before we dive into the data and analysis itself. So we're looking at the last 12 months or so up through the end of September 2020. So you'll see all of the effects of COVID. One of the more interesting parts of this data set is the fact that we're looking at not just the aggregate movement of quoting volume and price changes, but we're actually going to break it down by category. We use NAFM categories. There's a number of ways you can break it down. We have thousands of different categories that get very, very micro in nature, but we broke these down by categories, and you'll see some interesting trends. Not all categories are moving in the same direction right now. The other interesting part of this that has not been shown anywhere before is the deviated pricing structure. And this is really the way to see how list price, what manufacturers put out there and we're all familiar with, goes to net price, what the dealer pays, which goes to sell price, which is what the food service operator pays. And we're going to get into some detail about what that deviated pricing structure looks like and what the margins look like at each of those stages at a high level. And then also we can actually look at it within categories, which tell some really interesting trends.
Thanks, David. So we'll dive in to look at the pricing trends now. And just to reiterate something David's just said, the three prices that we need to have in the back of our heads are list price, which is the manufacturer's listed price, net price, which is the price the dealer pays to the manufacturer, and the sell price, which is what they sell it at to their customer. What's interesting is seeing how those three prices move in relation to each other. So David's going to go ahead now and dive into the trends and how those three relate over time.
Yeah, so we can see here some really general statistics. We'll break these down even more after this slide. But overall, one of the interesting things is the discount rate. So you can see if you average all of the different quotes that are sent, the average discount off of list across all UK quotes right now sits at about 47%. The median is about 50, so it actually, there's not a lot of outliers here. If you compare that to the markup rate, so the markup off of the net price that dealers charge to a operator, you actually see a much larger spread between the average and the median, indicating there's actually a much larger range and a lot of outliers on the high side within the markup that you don't actually see on the list. The discount rate varies by category, but overall it's a lot more consistent. And then you can also see some data on, how often do products show up. The average is about 3.3, 2 is the median. And so in general, out of this data set, you would expect the average product to show up in at least 3 quotes every month. And of the average product, you get about 5.2 units total quoted. So sometimes there's multiple units quoted on an individual project. On the average changes, this is really interesting, especially in context to other geographies, such as North America. You'll see here that list price, net price, and sell price. One thing to note is that sell price is actually expanding. It's growing faster than all the other, the list price and net price, and actually much faster than net price. But in general, they're all fairly low. They're all between 0 and 1%. It's a very low growth environment over the past year in terms of price. The median is 0 across all categories, and that is very abnormal to see the median. So if you take the median, 50% of products have 0 price change. That's pretty remarkable. The list price, the net price, and sell price you'd expect to see in the 2 to 4% range. They're actually very tight within 0.5% and 1%, which is very abnormal. All right, let's get to the fun stuff here. This is a lot of data, and we could pick this apart for quite a while, but I'll zero in on a few categories. What you're seeing here, the top is a representation visually, and then the bottom is the actual numbers being represented. What you're seeing is in the tall blue, the light blue line is the list price, and then the net price to dealers, and then how it gets marked up to the orange price that goes out to operators. And what you see at the top is the average price for a product in that category. Then at the bottom, you can actually see how the list price changes with regards to net price and sell price. So let's take food prep equipment, for example. You can see the list price has gone up, about 0.4%, still quite low. Net price has only gone up, has gone up much less, basically at 0, but 0.15. And you can see that the sell price is going up a lot more. And so what that tells us is that the deal on the dealer side, there is an increase in sell price that's outpacing their costs, meaning you're actually having the operator pay a higher margin. Often what we see is that's because there's a reduced volume in that category, and there's a pretty clear volume to price relationship that we'll see in several of these slides. Smallwares, you actually see the opposite. The trend is the opposite. So if you look at the smallwares, that first red box, you have a much larger list price than you do sell price. And the same is actually true of tabletop and servingware. You're actually seeing a negative price change from over the past year, which is pretty extraordinary. That does not happen very often at all. So we could go into this more, but safe to say there's large differences when you look at the price changes between categories and when you look at them across the deviated pricing structure that we have in the industry. One last note here, this is a trend of, if we look at all the products, how has price trended over time? Well, the interesting part is if you kind of average everything, you're actually seeing a slight downward slope throughout this past year. Obviously, it's been quite rocky, but overall, you're seeing a relative downward slope, which fits in line with the idea that we're flat, generally flat. Typically, if you looked at any other year, I think you'd see a greater slope upwards. We're not seeing that this year for some of the obvious reasons.
Awesome, thanks, David. Just to reiterate something we said at the beginning, we're going to make these slides available afterwards for everybody because very understandably, you all want to see your own categories data, and there's a lot of data to go into. So we'll make sure these are all available afterwards. So next up, we're going to look at the quoting activity through the system. Now, this is kind of the bare bones. This is the bread and butter of what we do, is how much is being quoted. And again, we're going to look at it by category. So again, try and keep your eyes on your category as David goes through it. But he's going to go through how the volumes varied over the last 12 months. And I think there's a couple of bits certainly that might be a bit of a shock for you.
Yeah, so if we look at the overall quoting volume by month, and what do we mean by that? I mean, if we add up all of the quotes in a given month and then break them down by category, what does it look like? And this is what it looks like. And so if we look at, say something like primary cooking equipment, up here is sort of the top purple one, you see predictably a dip in December. By the way, that dip in December always exists. That is seasonal and exists in this industry. And that's the one we sort of expect. But then what you see is a big dip that we didn't expect due to COVID. In primary cooking equipment, you saw a very big dip and a recent recovery about level with what was happening at the very beginning of the year. Now, other categories were hit very differently by this. And if you look, one that's really interesting is refrigeration and ice machines. It starts over here at about 1.1 million pounds per month being quoted. And actually, if you follow the line, it actually kind of stumbles upward. And so you see an actual kind of general upward trend. Of course, there were a few months in here where it fell, but in general, you actually see an upward trend. So suffice it to say, there are trends across every category that look very different. You can actually look at this by units quoted over time as well. And from a unit perspective, you also see differences. And you can pick through this a little bit. I won't spend a lot of time on it, but to suffice it to say, there are a lot of interesting trends in here. But overall, I would say one of the major takeaways is compare the magnitude of what happens typically in December with what you see during COVID. It differs region by region, but it's an interesting comparison point to put into context, that's one of the hard things to do with COVID, is put into context the magnitude that we're seeing in the drop of quoting activity and sales. Finally, I wanted to include one regional comparison. It's a little hard to see because the volumes are so different. So we actually plotted them on different axes here. But this is the US, Canada, and the UK, just to give a general sense of what does it look like overall. One thing that's really interesting is, and you can't see it fully here, but you see that in the UK, there was actually a much steeper decline. You see a roughly halving or more of quoting volume over the 2 months that COVID really set in. That is much steeper than anything else. The good news, however, is that you actually saw an equally sharp recovery when people went on furlough in the UK. It was taken much more seriously. And so you saw a steep decline and then it picked back up much more quickly. We saw this in our user activity data as well. If we look at the number of users who are logging on and using AQ every day to do their quotes, we saw this same trend. Canada is sort of a different example where it sort of slumped for several months going downward, and you didn't see a sort of a V shape that you see more of. Of course, it's more of a long U in UK's case and in the US. And in the US, we also are not recovering to the same extent as in the UK. So high level UK, sharper downturn, sharper upturn, and we'll see where we go from here.
Absolutely, and we'll try and run this again towards the end of the year or maybe beginning of next year, so we can take Q4 into account. As we know, who knows what the next few months are going to look like over here. So we'll redo it and see what the shape looks like. Interesting, you called out refrigeration as one of the areas that sort of picked up rather than dropped down, David. I had a conversation with one of the big manufacturers over the summer of refrigeration, and they pivoted their model and done very well for themselves business-wise by flipping over to the medical sector and supporting the medical sector with the pop-up of the Nightingale hospitals and all the rest of it. So I expect we're seeing some of that crossover in there as well. So we'll talk a bit more about COVID now, because it's the one thing of the year that has impacted this industry so hard. If you've got any questions from now as we go, then please do pop them in the chat, because we are approaching the Q&A at the end. So if you've got any questions for David, for James, for Keith, or for I, then please do pop them in the chat and we will come to them in a couple of minutes' time.
Got it. So just a couple slides here. This is meant to show what is the quoting volume like, something we're just looking at, but as a percentage of what we were doing pre-COVID. And it actually lines up pretty remarkably well, Keith, with your statistics that you showed earlier. And that is to say, there was a big drop off in the range of 40 to 50%. Here it shows 37.8% when COVID hit. We're actually seeing a pretty big uptick, and this is what I described earlier: a steep, downturn, and then an equally steep upturn. And in recent months, we've actually returned to January levels. Now, what does that mean? January levels in the UK, at least, were not very high. So the good news is we're up to what it looked like before COVID in some respects. The bad news is that January mark was not a very high mark, and typically you would want to see an increase off of that mark in normal years. Here we don't see that exactly. In addition, when you look at overall quoting volume, it is still very rocky, and there's still a lot, obviously, in COVID to deal with. And so we'll see how these play out over time, but this gives you a rough order of magnitude of what's been going on in the market. And of course, this differs by category. And that's the biggest point of all this. By segment, by category, all of this differs when you break it down. So, but this gives you a high level if you throw it all together into one bucket. A quick note on COVID products. One question we get often is, okay, well, we're seeing an uptick, but is that just because people are buying a lot of PPE? Are they just buying cleaning supplies, and is that the reason? Well, the answer is really no. What we see here is we actually went through and coded a lot of products that are core COVID or PPE products. So if you go into your AQ and type in COVID or PPE, you'll actually see these products come up. And they don't account for a lot of products. There was a big uptick in them and a roughly doubling of the amount of these sort of PPE products that were being ordered. And so you see a big spike into the summer. However, overall, that's still a relatively small amount, and it seemed to stabilize. So since COVID started, everyone seems to now have their supplies, have their equipment, and since that point, it hasn't been a big share of the overall quoting volume.
Great, thanks, David. John's asked a question in the chat, which is, how has the conversion rate from quote to sale been affected by COVID? Which is a very timely question, and thank you very much for leading us into this section quite nicely there, John. So we'll go through this section. If that doesn't answer your question, please do ask something again. So the final section we're going to look at is something called quote acceptance. Now, this was a free feature that we released for the dealers back in April this year. It's a free part of the program. It's an add-on, and we've called it quote acceptance. It is designed so that dealers or anybody who's using the system to create quotations can send their quotations electronically to their customers, so their customers can view them in a browser rather than by a PDF. Now, the beauty of doing it this way is that the end customer can view, accept, and decline those quotations from the browser. They can add PO numbers, notes to the salespeople, whatever they want to do. They can do all of that from in the browser. So the bigger side of that for us from a data point of view, which is what we're focusing on today, is that we can now start putting data together around that, exactly what you've asked, John. How does the quoted volume convert to sales volume? So we can track what's been viewed, as can the dealers now, so they can all see when their end user has loaded and opened the quote. We can track when it's been accepted. We can track when it's been declined. So not only can we start seeing data about rates and all of that sort of stuff from our point of view, but the dealers now all of a sudden have a much better view of their sales pipeline as well. If you want to take it one step further, then we can start looking at how long it takes to go from a quote being sent to a quote being viewed to a quote being accepted, and we can start seeing data on that. And even further, we can even, for those of you who do many iterations of a quote for a project, for example, for a large project, we can start seeing on average how many iterations of a quote it takes to get something accepted as well. So there's a lot of data that we can start building and sharing with you guys from this part of the product. Now, as I said, it is brand new from April onwards, so we released it right in the middle of the pandemic, so it was ready to go when things picked up. So the data is still the data set is very small because it's a new part of the system. But as time goes on and as more dealers start using it, the quality and the volume of the data that we can start sharing will be much greater. So David, do you want to take through the couple of slides we've got on this?
Yeah, so we pulled out a little bit of data. We've got a lot of data in here. Like with all the other slides, we are picking just 1 or 2 points out of a larger data set that are particularly illustrative of the whole data set. Here we've got a few data points to look at. One of I think the most interesting is that we found, and we're very surprised by this actually, is the extent to which that sales timeline has condensed, has shortened due to the quote acceptance feature. And so that conversion rate from a quote to get sent out, to getting viewed, to getting accepted, has shortened. So if you look at this first sort of neon green pie chart here, essentially what this is telling you is it's saying from the time you send a quote using quote acceptance, you send one of these electronic quotes to it getting viewed, is that the same day, is that the next day, or is that 2+ days? And in 82% of the cases, that quote gets viewed on the same day. So you get in front of someone, they open it up, and you can actually confirm and see in your system they have viewed that quote. I mean, how many of you have wanted to know if they even received the quote? It's very hard to do with a PDF. Now you have that confirmation. And then on the accepted quotes, do the same thing. And what you see is that 69% of the time, that quote that gets viewed actually gets accepted within 1 day. And we find that to be pretty remarkable. We haven't had this feature around long enough. We launched this in April to tell the difference between pre-COVID and post-COVID, to John's question earlier. But now that we can track this, we can see over time how that shifts. Anecdotally, we know that typically it can take, 7 to 14, 1, 2, even 3 weeks to go through that timeline when you're sending PDFs back and forth. The beauty of this is you can get it accepted and signed very quickly. So that's one really interesting data point. Another interesting data point is how many companies in the UK are using quote acceptance already. So it looks like 54% of companies have used quote acceptance. We'd encourage everyone to use it. It's a totally free feature that allows you to better track this type of data. And we're starting to pull together all the pieces to answer those questions of what does that sales conversion look like? What's the timeline? And that's really, really interesting data to be able to track industry activity and what's going on. So really interesting data here. There's a lot more behind the scenes, but I'll kind of leave it at that for now.
Great, thank you. So that's the end of the data part of the webinar. There's a few questions in, so I'll ask a few. One thing I will say is when we're looking at the data that we're presenting, a couple of people have raised concerns in the past that is a lot of how much data do we view, how much do we have access to, and please do rest assured everything we do is on an average basis. We don't spend days going through individual quotes or going through individual things. We take an amalgamation of thousands and thousands of data points to build the views that we do. So I'll start off with a question, I think for David is probably the best one. David, how many of the quotes, this comes from Ian, how many of the quotes accepted are for one-off items, single units, possible emergency buys, I guess compared to bigger projects? Well,
we have sort of removed a lot of the just one-time purchases from this data set. Why have we done that? Well, it's very hard to tell price changes, for example, if it's a one-time purchase, because unless you have multiple purchases, you can't tell any difference in the change over time. So if there is truly a one-time purchase, we actually don't reflect it in this particular data set because that one-time, one-off purchase doesn't really give us any data about trends over time, and so it ends up adding noise to the overall data set. And so when you saw at the beginning, we took 144 million pounds worth of data and then trimmed it down a little bit to, I think, 111 million pounds. That's essentially what we're doing, is getting rid of those one-offs. And so in this particular data set, we're really focused on overall aggregate trends across all companies and a larger set of consistently quoted products.
Great, thank you, David. We're actually at time, so we're going to have to call it a day there, I'm afraid. Is there anything else, Keith, you wanted to say before we go?
Well, really just a thank you to everybody for joining us today, and thank you for the fact that as the FEA we've been able to collaborate, I think, so well to dovetail these two important pieces of work together. And I think, David and Chris, it sets the scene for perhaps further work that we can do to build a picture of what is a very fragmented market, as we all know, but providing this sort of data and statistics, I think, gives a unique insight at a point in time, which, as I said at the start, is a look back at the past, where we are in the present, and also an insight into what the future might look like. So really, I just want to say thank you very much to AQ, an associate member of the FEA. Delighted to have you on board, and I'm sure we can pick up any questions offline through the various inboxes, and look forward to receiving that. But from the FEA and the FEA team, thank you very much to you all for joining us this afternoon. Thank you.
Thank you.
Yes, and likewise here. Thanks, everyone. Really appreciate everyone joining. We've got a bunch of questions here in the comments, and really look forward to engaging with you and answering those questions. And Keith, thank you, and I hope we can continue this collaboration and get even more data and insights for the industry.
Thanks, everybody. Goodbye.
Thanks, everyone. Goodbye.
Thank you. Take care.